Hey, listeners, welcome back to the ValueHunt podcast. And today I have here a very special guest and very specialized in Asia. So I guess we'll have a lot of fun and learn a lot of new stuff on a whole different continent that I'm not really an expert on. And why don't you say a couple of words before I drill you down with the questions?
Sure. Well, thanks for inviting me, David. My name is Michael Fritzell. I live in Singapore. I've been here for 11 years in Singapore and Asia, about 15 years now. So I've been covering stocks in this part of the world for a long time. And that's kind of what I focus on now as well on my Substack, which is my full-time job.
Yeah, I really, my first question is really, how do you do research for your blog, and like what inspired you to kind of go specifically into Asian stocks and then from there kind of build a whole business of research? Maybe your journey towards getting where you are today would be pretty cool for me and my guests to know.
Sure, absolutely. I'm Swedish. I grew up in Sweden most of the time. I happened to be born in Switzerland, but to Swedish parents, and spent most of my time on the west coast of Sweden. And I felt that it was quite boring. It would have been boring to stay in Sweden, so that was why I went overseas in my first job in investment banking in the UK, in London, and then from there I happened to come to Asia, and initially I studied Chinese. I took a gap year, if you will,
Hmm?
and was lucky enough to find a job in China in Shanghai working for a fund. It was a Luxembourg-based fund, but I was in Shanghai at the time, and I was the analyst on the ground, helping the fund manager to find ideas and also to liaise with the company management teams to make sure that our existing investments were doing fine. So that's really how it started, and that was, I suppose, I started about 2010, so about 15 years ago, and I was in China for 4 years in total, and after that I joined this family office in Singapore, co-managing their Asian portfolio, which was quite sizable at the time. So that's really how I came here, and I ended up staying here, forming a family, and it's been. I left Sweden almost 20 years ago at this point, so it's been quite a journey. And why did I focus on running a Substack about 4 years ago? That was partly due to a want of starting something on my own and doing the kind of research that I think is interesting. And even though I'm Swedish, I never focused on Swedish equities. I don't know what else I want to do. My specialty is really Southeast Asian equities and also East Asian equities. So I formed the Substack around those skills, those competence areas or circle of competence. And that's really all I write about. So I gave myself a mandate to look at value stocks in this part of the world, and been doing that now for about 3.5 years through the
Yeah,
Substack.
that's pretty cool, and I guess that people that are interested in Asian equities, especially people that live in Europe and probably outside of Asia, then they have a real clear product offering from you, I guess, and I guess that helps. So I'm also curious to know what kind of opportunities you think that are often overlooked by international investors that you see on the ground in Asia, and that people might have a misconception about them. So probably that would be an interesting segue to the first question.
Yeah, I think there is a tendency of most investors to focus on the top one or two or three biggest stocks in every country, and if you don't have liquidity constraints, there's just so much more that you can do
Mhm.
than Alibaba or Sony. Not to say that they're also bad companies. I don't think so. I think they're actually maybe worth owning, with the caveat that this is not investment advice. I just want to say that anything I say is just for educational purposes. But there's also a lot beyond that. There are 10,000 stocks in Asia, and like in Japan, just 3,000 stocks in Japan. In China, maybe 4 or 5,000. So there's so much opportunity if you're willing to dig a little bit deeper. It does require some language skills in some cases, but every country has improved in that respect. Korea, Japan, now you can get a lot of information in English. So if you're a stock picker, there's tons of opportunities. I would be careful with indices in Asia because they're typically structured in a poor way. But in terms of ideas, one, there's so many stocks out there. Like right here, I got the Japan Company Handbook, 3,000 stocks.
Wow,
You can just open it, scroll through it. You will guaranteed find something. If you just sit there for an hour.
that's
Uh,
pretty cool. I
and the
thought
fact is,
that's sorry. I thought those kind of books were just from kind of Buffett era, and you couldn't find them anymore. So yeah, that's pretty cool.
Japan is a little bit behind. They still use fax machines and so on. But
Mhm.
so this company, they stopped releasing this book I think a few months ago. You may still be able to buy it if you look online. But yeah, now it's all online, I suppose. But in any case, yeah, there are tons of opportunities, and if you do the research yourself and don't rely on sell side, you can be one of the few people who are looking at these stocks other than perhaps locals. So I think competition is very low, and you're dealing with your counterparties will be individuals who are not particularly well informed. So that's really I wouldn't be able to compete. I think if I had to invest in large caps in the U.S. or
Mm, yeah, yeah. I
yeah.
think that's a great mindset to go about things, especially when you are a micro cap investor or small cap, or you have like small amounts of money, I guess. So my next question is actually a follow up on some of the things you said, which are more on the regulatory and like cultural barriers. Obviously, you live in Singapore, so it's easier for you, but I guess that for international investors that aren't really familiar with the culture and don't live there, what kind of advice do you have for them, and how do you navigate yourself those barriers? Because at the end of the day, I guess you still feel like a bit of an European guy. So yeah, please
Yeah.
tell me your thoughts on that.
Yeah, I think it's interesting. I do think it is always difficult as a foreigner, and it would be difficult. If I were Korean and I would invest in China, it would still be difficult. And
Mhm.
even if you're Chinese, they're also finding it quite difficult to invest in stocks. In A shares or Hong Kong stocks. So I think it's the same kind of analysis we do anyways. One
Mhm.
is understanding the character of the people involved, management team, on the controlling shareholder, and that's just about looking at the track record of what they've done in the past because behaviors repeat. And secondly, you would look at corporate governance, red flags, including the corporate structure, whether it's complex or whether everything is done within the list co. That's something I would look at, but there are plenty of other things that I would care about, including understanding the distribution and suppliers, understanding whether there might be issues there in terms of wrong pricing or related party transactions. So you just have to do the analysis, and I can provide details on exactly what kind of analysis I do, but it's kind of the same regardless of which country you're looking at. Culture, of course, differs, and there is a tendency, perhaps in Southeast Asia, that management teams are a little bit stingy, I suppose, with their
Mhm.
capital. That's not just Southeast
Okay.
Asia, but also Korea, Japan. They just tend to accumulate cash on the balance sheet.
Yeah.
Um, so that's something you learn, and then um, at the at the end of the day, you want somebody who has the character to be generous enough to share the wealth with minorities, um, and wants to allocates capital rationally. So I don't think it's actually all that different from other parts of the world. And I also think that even in countries like the US, there are clear issues with many of these companies too, in terms of excessive share option, issuance for share options,
Yeah.
and non-voting right shares, very common in the US tech sector. But in my experience, um, you want to find the special situation, the exception to the rule. So I find all of these generalizations about Asian equities being more risky or emerging market equities being more risky uh, are just not very useful, because you
Mhm.
wouldn't invest in the index anyway, or I don't recommend you
Yeah.
to do so.
Uh, Actually, I have like a personal question here because recently I've been like kind of managing a small amount of money for my mom, and it's really for retirement and all that. So I kind of really just bought very small percent of the portfolio in like MSCI China, something like that.
Mhm.
So
Yeah.
I'm curious to know if you could kind of expand on your reasoning why indexes aren't a good idea in Asia, and specifically if this one is kind of the one of the better ones, because I guess it's pretty well known company, but I really haven't done too much upfront work to
Oh,
be honest on that.
well, it's okay. I think it's fine. The um, occasionally you will have weights in MSCI China that are just excessive. Perhaps in 2021 it was 50% tech. A lot of it was software. So you got
Mhm.
an exposure that was excessively focused on tech, and
Mhm.
just be aware of that. You might get certain exposure that you don't really understand or don't want. That happened to be a negative thing. The fact that there was so much tech in that ETF back in 2021 because of the crackdown on tech companies in China. Now I think it's a lot more balanced, so I wouldn't worry about it too much. There is one thing though. I mean, value-weighted indices tend to be momentum indices. Like ETFs
Mhm.
based on them tend to be momentum, perform well, or when a market continues to do well, because the bigger
Yeah.
companies will have a greater exposure in the index,
Mhm.
and you'll allocate more to the expensive stocks, let's say.
Yeah.
Um, so I don't know. It depends on how the market performs. Like if the market continues to do well and the best companies continue to do even better, that's what you want. If you think there's mean
Mhm.
reversion across all companies, then you should own an equal weighted index, which we don't really have in Asia. But I think like in terms of indices, it's worse in like real emerging markets, because then
Mm.
they're so illiquid that you can't have a
Mhm.
representative index. Like if you want to buy Vietnam, for
Yeah.
example, there's nothing there. Like you can buy
Mhm.
some ETF, but it has like 15% in Thai shares, which have nothing to do with Vietnam. And the
Yeah.
exposure, you tend to get like a lot of banks or property developers. Whereas in Southeast Asia, what you really want to have exposure to is consumer names, because they have pricing power and probably better run and such.
Yeah, sure. Yeah, so thank you so much for providing that info. Probably now I will pay a bit more attention to it. Honestly, it's so meaningless of a position that yeah, I didn't do too much work. But the rest is pretty much just individual companies that I think that will do well over time. So like I also have a follow-up question just to finish kind of this more like holistic approach that you have, and then we can go into more specific ones because I do know we have mutual interest in some companies, so probably that would be cool
Sure.
to ask you on. But before that, I would like to ask you what kind of setbacks have you had in your investment career, and kind of what did you learn from those experiences? Because I bet those are pretty different from your like typical US investor or something. So yeah, probably it could be interesting to expand on that.
Yeah, I think when you ask the question, the kind of companies that come to mind would tend to be like Chinese frauds. Um, I don't recall exactly what we had exposure to, but there was one company called Chowda, which had farms in Fujian province in China,
Mhm.
and the capex was just completely stolen, more or less. I
Wow.
don't know exactly how the accounting worked, but the accounts did not make any sense, and I think that went to zero. Um, I've Yeah, I don't recall whether we owned it or not, but there's one of them that stands out. And I also remember there was another company called Urong Foods, I think it's called, and
Mm.
that one we probably had exposure to. Short sellers came out with a report on it, and I think it was completely accurate. And sell side came out and supported it. So
Wow.
I guess it made me a lot less trustful about anything that comes out of China when it comes to accounts. Um, it feels like a large proportion of Chinese companies have been attacked by short sellers. That's in the past, maybe, yeah. So setbacks. Um, I think I had exposure to oil companies, like oil rigs, 2014. Some exposure, um, but that's really it. I think the learnings is really one. Of course, corporate governance is one. Like understanding that the accounts are real, that the cash flows belong. Like you're going to get a share of those
Hmm.
cash flows. Another thing is in not investing in companies with low debt. So good
Mm.
balance sheets are crucial. And I think if you look at the stocks that I've covered in the past on the Substack, they are predominantly very safe and very, perhaps excessively boring, perhaps, but in all cases conservative in
Mhm.
every way, including the balance sheet. And I think that comes from those experiences.
Interesting. Actually, before jumping into the other questions, I just have a question that came to mind, which is, do you see yourself as like doing research that you would have done anyways and posting it on Substack, or do you redirect your research according to like the demand on the Substack? Because I'm asking this on a personal level because there's kind of a dilemma between attracting people and really doing what you like. And a lot of people have told me, "Oh, you should do more general content to get more views and all that." But I don't really feel like doing it. So yeah, just
Mm.
wanted to know how you deal with that.
I'm 100% convinced that the answer is to focus on what you think, what you believe in. And the reason is that if you cover stocks that are popular, they're
Mm,
typically overpriced, or perhaps they have issues that are not haven't been
mm,
exposed yet. So you can end up with stocks that perform poorly, and then people will lose faith because they lose money from whether you recommend them or not. They might
mhm,
still invest, and they might lose money. So, and but the perhaps even more important reason is that if you don't focus on what you truly believe in or what you're interested in, you will kind of stop writing at some point. And I've
yeah.
seen, I probably follow. If you look at my lists of publication that I follow on Substack, it's over 400, maybe 430. But the
Yeah.
vast majority have stopped writing because it just it takes a lot of work. So
Mhm.
you gotta have some passion about it, and so I tried a little bit to focus more on companies that people say they're interested in or might be in their portfolios, and that may work to build a business. But personally, uh, I think you can do really well by just doing your own thing.
Mhm.
There are so many people out there interested in investment related research, um, like Seeking Alpha. Maybe they have 50 million monthly users, something like that. So there,
Wow.
you can find thousands of I think people who think like you. So that is the answer. And actually, when I started in 2021, I quit my job like in advance, and I set aside money because I knew that I would be without a income for a few years, which is a bit scary when you have you
Mhm.
have to support a family. But so I relied on capital gains partly,
Mhm.
like two
Yeah.
portfolios, but I had to like perform, otherwise it just wouldn't work. So a lot
Mhm.
of the write-ups that I've done, like I knew nobody would be interested except myself.
Yeah.
So that's the
Okay.
answer.
Okay. That's a good answer, I guess. Now, moving on to more specific questions. I'm really curious to know more about Fairfax India because I also invested a bit for my mom again, and I really like the setup. India looks like a great opportunity set, and maybe you could just share your take on it because also, fortunately enough, I will be able to meet Ben Watts like in October this year in a conference in Lisbon, whatever. So yeah, maybe you could kind of give me your take on it, and we can go from there afterwards.
Fantastic. Well, interesting. I'm going to actually look forward to hearing what you say about Ben then, or if you get any
Okay,
interesting information. I
cool.
love Fairfax India. I bought shares myself in January, and I think the main attraction is Bangalore International Airport,
Hmm.
and it is such a amazing asset in several ways. And the key thing is, well, the key two things, I suppose, is that traffic is going to grow for the foreseeable future because Indian Airlines have such massive Airbus and Boeing orders that haven't been completed yet. It's going to grow the aircraft fleet significantly. So it's not going to be difficult to reach 90 or 100 or 130 million, like in the really really long run. So sitting on this asset with a very long concession life is just amazing, and it should be extremely valuable in my view. The second reason is that their regulatory framework is a hybrid till framework, which means that they are allowed to make a high return on equity on the non-retail, on the non-regulated part of the business, which means that they can set their own prices and therefore earn a high return on those captive audience, captive travelers that they spend a few hours before at the airport before traveling. So I think it's an asset that's almost as good as airports of Thailand, and that one trades at maybe 40, 50 times PE.
Wow.
Um, I mean, of course, everything is about the price, but the valuation for Bangalore International Airport in the accounts of Fairfax India is not high. It's two and a half perhaps or something like that, 2.7, I forget, million USD, billion USD. But it could easily be 4, 5 billion. And
Mm.
the markets are crazy in India as well. Like you can get high valuations. So
Yeah.
if you yeah, extremely high. So this is like an extremely competent team of people investing. Extremely impressed by Prem Watsa and his team. They've
Hmm.
done amazingly well in terms of choosing their assets. It is not easy to find undervalued assets in India today, and they keep buying more of Bangalore Airport, which I think is exactly the right thing to do.
Hmm.
So the NAV right now is 21 dollars per share. It's going to go up when the IPO happens. I think personally it's going to go up to 30, 35. So, and you might see a certain discount to NAV, but it's not going to be, it's not going to be 30% discount.
What kind
Or
of updates do you have on the IPO? Because I do know it's a work in progress for a long time, I guess, and it would be kind of a good time to IPO a good asset in India because of the valuations and all that. So
it's a
I
fantastic
don't
time.
know.
Like this is the time to do it. I don't know why exactly. Well, I suspect the reason they haven't done it yet. I mean, there were plans to do it before September 2025, but the reason I think they haven't done it is because they're buying shares from Siemens, and they want to buy those shares before starting the transaction. They also need regulatory approval, which they haven't got yet, and I don't exactly know what the reasons are for
Hmm.
that delay. Um, but even I just think like once the IPO happens, the NAV will just shoot up because
Yeah.
it will start like right now it's based on their own valuation. They have had an incentive to keep it low to acquire more shares from Siemens. But once that happens, it will adjust with the share price of Bangalore International Airport or its
Yeah.
parent company.
Yeah, that's an interesting one to keep a look on, to keep an eye on, and you kind of get the governance of Fairfax, but in an emerging market, which is also good. I don't know if you agree, because I haven't done too much research on the team running the operations there, but probably you know more about it. So please tell me if I'm wrong or not.
Well, their investments have been the track record has been quite good, and I think it's extremely hard market to invest in. So are they all trustworthy? I mean, I know short sellers have criticized Primwatsa for some of the
Hmm.
valuations of their balance on the assets on the balance sheet in the 2000s,
Mm-hmm.
and there might have been behavior that was if not illegal, perhaps not perfect, but I'm not so sure. I mean, I think
Mm-hmm.
you could also argue. Like I read Muddy Waters' report on Fairfax Financial, and I think they may have been right about some things, but at the same time, there were also assets within Fairfax Financial that were undervalued.
Yeah.
So I personally don't believe that the assets are overvalued in Fairfax India's
Mm-hmm.
uh, on its balance sheets. Um,
Interesting.
Actually, I mean, in terms of Bangalore Airport, the opposite. It's undervalued for sure.
Yeah. Yeah. I think it's pretty clear. Yeah. So now, kind of going bottom up, I would like to know how this particular investment fits into your general approach to investing. I guess you look for cheap valuations, but could you please expand on that and what kind of boxes it ticks for you, and then probably move on to your like strategy in general?
I like to see um, some kind of competitive advantage or some kind of franchise that's hard to beat. So I don't
Mm,
like commodity companies too much, unless it's run by some really competent manager. But like Fairfax India, to use that as an example, I think that the airport is they have a monopoly on a
yeah.
fast growing Indian city. I used to live in Bangalore like in the mid 2000s, and and it's one of the best places in India, partly because of the tech sector, software
Hmm.
industry, but also the temperature is great. It's up in the mountains, about 1,000 meters over sea level. It's a fantastic, cool environment to live in when it comes to southern India. And they sit there with this a fast growing city that's rapidly developing with a subway line, and just gonna enjoy the fruits of this immense growth in air travel.
Hmm.
So I suppose that the fact that it's a monopoly really attracts me, and then value I think is there. It is undervalued, the stock. It's not an amazingly undervalued company. Like it's not going to be a triple, in the short term, but I'm perfectly okay with that as long as there's some near-term catalyst. And so in the past, I've explicitly said that my strategy is to buy undervalued companies with a catalyst. And so Fairfax India is one of them where the catalyst is related to in an IPO. I own Samsonite as well. It's the same situation there. I'm also hoping for a transaction, an IPO in the US. And yeah, it's the same situation there. Like I think they have something special, a brand name, which is hard to beat. So
Mm.
very blue chip multi companies that are undervalued. It doesn't have to necessarily have to be the fastest growing, but as long as there's a symmetry and a catalyst, I'm happy to jump on.
Nice, interesting. I would like to double click on the catalyst part because personally, I've been looking a lot at companies that are at an inflection, probably changing management, new contract or whatever. Because I focus on smaller companies, so those kind of inflections make a bigger difference compared to the bigger companies. So I'm curious to know how you spot like catalysts, and how do you kind of screen for that, because I know I guess you do a lot of manual work in screening. I don't know if you rely on like software or anything like that, but you can't really screen for like I don't know, an IPO or whatever. I mean, probably in the future you will, but yeah, just curious to know how do you spot the catalysts, and yeah, how do you look for
Mm.
them when doing some screening or research?
I I Well, I want to preface this by saying that I am not perhaps the best person when it comes to spotting the right kind of catalysts. There are
Mm-hmm.
some people out there on Twitter and elsewhere who are just rack up these amazing returns,
Mm-hmm.
um, and presumably the best catalyst will be an earnings inflection. But
Mm-hmm.
it's really hard to know, and a lot of times I'm guessing there will be an earnings inflection, but there's something completely different happens.
Yeah.
So I think during COVID it was easy. I knew that these many of these companies would recover, like Japan's tourist industry. I think that was a
Yeah.
high probability bet that it would eventually recover. Um, but yeah, I'm struggling a little bit in terms of finding good catalysts.
Oh, got it. Mm, I mean, at least that was a an honest kind of answer. But yeah, also same for me. I'm kind of trying to figure out what catalysts work better than than others. So I guess
Yeah,
it's a work in progress.
yeah. I mean, it's on a case basis. So Fairfax India, I think that this is a fairly high probability catalyst. So if the IPO process starts, then I will probably buy more shares because we know that the
Mm.
NAV will change when it's listed, when
Yeah,
Bangalore Airport is
yeah.
listed. But Samsonite, I'm more skeptical about that because who knows whether US investors will take a liking to Samsonite. Now it's like PE
Mhm.
11. Maybe that's cheap. Maybe it's 15. Who knows? But yeah, sentiment is hard to kind of to estimate
Mm.
how it's
Yeah,
going to
yeah,
change.
for sure. Actually, I asked recently a question on Twitter on a poll, asking whether you think you can time specific companies, because it's a well-known fact that you can't really, or it's a dumb kind of attempt to time the markets as a whole. But do you personally feel you can have a better sense of timing when it comes to specific companies that you know well, or you just kind of buy and yeah, don't really try to play that game?
No, I do. I mean, sometimes you know what the near term catalyst will be. For example,
Hmm.
Nintendo. Um, but it's difficult. Like for example, the Switch Two. I knew um, when it was going to come out, but I didn't buy because I felt that the near term earnings would be weak. So the markets are pricing in events far ahead of time, sometimes years in
Yeah.
advance. So it's really hard, and I think you may be well advised, frankly, to just buy stocks that are undervalued, and there is something positive happening in the future. But um, yeah, yeah, it's difficult. Sorry, what was your question here?
Yeah, it was like more on the ability to time specific companies as compared to the market as a whole. So
Yeah,
it was just like yeah.
yeah, I think it's extremely difficult. I try just to buy like if I can fast growing companies and
Hmm.
just hold them when they're growing, or buy value companies when there's some kind of value unlock.
Hmm.
Um, but sometimes, like a lot of times, you don't know um, exactly when there'd be a huge value unlock. Like I have a holding called Kaunavi, which was just acquired. I mean, that was lucky, but nobody predicted it, and I didn't do it either. Some other companies like IMEX China, I know that 2025 will be quite strong, so perhaps I've added it a bit more. I mean, that's a reason to add more, I think.
Hmm.
But yeah, it's on a case to case basis, and it's always a struggle, I think, even for professionals.
Got it. Yeah, makes sense. I mean, it's also kind of a more humble approach to not try to time it, because I guess you're assuming you're smarter than other people if you do so. So I don't know. But yeah, I would like to ask you a question on valuation, because I'm curious to know whether you approach valuation differently just because you're in Asia, or like looking at Asian companies. Do you apply like a greater discount, or what kind of hurdle are you looking for when investing in yeah, Asian equities, I guess?
Um, I I used to work for a firm that had like this different discount rate for each market. So like in Vietnam, they would require like 15%, and God knows where, like in Hong Kong, maybe like 7%, and try to discount cash flows and such. But that doesn't typically work because these supposedly risky markets, they also have um, like when the interest rates are high, typically stock prices are low, and you want to buy low. So
Mm-hmm.
why penalize them for high interest rate at a certain point in time? So I don't know. I mean, eventually you want to look at P ratios, but
Mm-hmm.
I personally don't care about P ratios for companies that are not well managed well. So, for example, in Japan, you have many companies with like return on equity at 5%, 6%.
Mm-hmm.
And who cares whether they trade at P7 or 8? It just doesn't matter.
Mm-hmm.
Like
Mm-hmm.
they're destroying capital. And so if earnings are not growing, you can be stuck for them for 15 years. You're going to have a very poor IRR. So, but if they do have decent capital allocation and they're growing, let's say 5, 10% per year, um, then suddenly I think it gets really interesting when they get to single digit P levels.
Mm-hmm.
Or if in a pure growth company that's doing well with strong market share gains due to a strong product, and they trade below 20 times, I'll consider that to be quite attractive typically.
Okay. Yeah, I think that's a good thing, because one thing I notice with really good investors is that they kind of start with the typical PE heuristic approach, then they go into more complex kind of models and all that, and then they get back to the basics of like the PEs and all that. So I guess it's all about really the big picture. So it's quite interesting that you also said that.
You can probably go back to my previous write-ups. I've done projections of future earnings, and a lot of times they're completely wrong. I mean, just straight up. So you can go back, and if you want to criticize me for it, you can. But it's hard to predict the future. So
Hmm.
at the end of the day, think about margins, think about revenue, and perhaps some kind of other catalysts. But and then just slap a multiple on it. That's really what we do here.
Yeah, exactly. It's guesstimates, I guess. Uh, so yeah, actually, I'm pretty much done with the investment related questions. As I think you're a pretty interesting and unique kind of guest, I would like to ask you more like personal questions, if that's okay. Obviously, not getting into like any sensitive stuff. I, I
Go
would
ahead.
just like to understand what kind of like lessons you learned on a personal level from all this traveling that you have done, and yeah, how's I don't know, just anything you want to share, because I guess it's not that usual that people, yeah, just move to Asian countries,
Yeah,
live there, especially from
I
Europe.
mean, good stories. I don't know. I mean, I think my experience in China was quite interesting because it's such a different place,
Mm-hmm.
and I take things to an extreme that perhaps others would not do. My friends back in Europe, they almost thought I was dead because I would just they nothing was allowed within China in terms of the tech platforms. Many of them were
Mm,
banned in 2010,
yeah.
and I spent most of my days just speaking Chinese, no English at all, no Swedish,
Mm-hmm.
and so that was quite an experience, and also learning, getting to know a lot of people
Mm-hmm.
within the country. I think was fascinating. Um, so yeah, it was the wild east, I suppose. Um, so that's interesting. Yeah, sorry.
No, I was actually going to interrupt you and ask you if you have any like crazy stories that you want to share, that you can share, obviously, on the kind of Chinese.
Crazy stories. I think I've also been, a few experiences. Like now, I'm thinking about work just because you asked.
Mm-hmm.
Um, but it's been a few times when I've been to factories and you see people looking at you a little bit,
Mm-hmm.
like, and then looking back after you've gone past like the manufacturing line, it will still look at you. That clearly not working, but just observing you as a foreigner.
Yeah.
And this exact company that we had visited targeted as a by short seller as a fraud and just went to zero.
Oh god.
Um, so that was, I think, something that also um, something that I thought about. Um, it was a wild couple of years, I think. and also in a, in a private life, living in Shanghai, that era, I think the best years, the peak years, I think, for Shanghai, as an international center, 2000 up until 2013. I think that was a lot of fun. It was very vibrant city. It still is in many ways, just a lot less fewer foreigners. Um, so yeah, a lot of nightclubs and drinking and such.
Got it. I also guess that, I mean, Singapore, it's much stricter from what I know in terms of what you can do and what you can't, but I guess it's also pretty active kind of life. So I'm also interested in knowing what kind of skills you have developed in relationship building over time, because obviously when you move out to a different country that speaks a completely different language,
Mm.
obviously knowing the language may have helped, but how have you managed building like relationships and friends in those kind of environments where you're not really, yeah, you're foreign, so
Yeah,
uh
yeah. You will always, seek friends within your tribe, I suppose. And in Shanghai, I hang out mostly with foreigners,
okay,
and that I think that's always been the case. It's been a bit difficult to interact with locals, although a lot easier in Singapore, where I feel like it's so international.
yeah,
So Singapore for me feels a lot more like home because most of us speak English. I mean, I can also speak Chinese, but I usually just speak English. And um, so, communicating, I don't think is an issue. And I think I spent so much time in Asia that I think my values have changed a little bit.
wow.
Um, I,
That's
you
cool.
know, and I think in many ways this part of the world is great. Like in terms of the education, they're more conservative. Like education is very important for many people
Mm,
in East Asia, especially. Um, there's a lot more, I think, community feeling, less individualistic, which I think
okay.
is great. So yeah. Um,
And so like what are kind of the bad parts of living in Asia other than not being able to see your family quite often and all that, I guess?
I suppose the worst part is maybe like you. Well, now it sounds like I'm going to complain, but Singapore has treated me very well, and I think in Asia, Japan and Singapore are these two countries where foreigners feel quite welcome and people are just easy to deal with, very friendly. But like you will still feel a little bit like a foreigner in many ways, and it's the system is partly set up in that way that foreigners live by themselves a bit. So I live in a condominium with mostly mainland Chinese, but also some Europeans. But we're all foreigners basically. So
Mm-hmm.
we're living in a bubble a little bit.
Okay,
Um,
got it. Got it.
Everything is well organized in Singapore. You it's convenient. If I go downstairs from here, I have 20, 30 restaurants. I have grocery stores open 24 hours. Like the subway system is just downstairs. It's just everything is very easy.
Mm.
But you do live in a bubble, and sometimes I think maybe it would be feel a little bit different if you would live somewhere and also feel like a local.
Yeah,
That said,
yeah, yeah.
though, I mean, I could become a citizen and just immerse myself completely. But no. Expat life is different, and I will admit I'm still living expat life in many ways.
Got it. Interesting. So my last question is, what would you recommend to a student that is planning to kind of take a first job in Asia, or that wants to move out to Asia just for an experience, I guess. So yeah, probably that would be cool.
I would probably not, I wouldn't probably not do it. Because there's just not many jobs out here, and the competition is fierce.
Mm.
Someone posted on Twitter about a job in Hong Kong, and they had like hundreds of applicants. It doesn't
Wow.
surprise me at all. I mean, I'm sure that's just the usual. I remember I applied for one job in Hong Kong, and like I got all the way, but then they hired somebody else who had like a Harvard grad education. It's just like this the amount of brilliant people out here is just crazy, immense, and they all want to come to Singapore or Hong Kong. So I'm sure there are opportunities, but I get the feeling that there are a lot of talent and a fairly limited amount of job opportunities. Perhaps more in Singapore if you're here,
Mhm.
or certain other places like Shenzhen. But generally, um, yeah, it's competitive, So I would probably suggest that students should start working at a company where they feel at home, like in a role where they feel like this just fits my personality perfectly.
Mhm.
And if they want to get exposure in another country, perhaps you can move after a few years. Set up a business somewhere else and get the overseas experience that way, or just take a gap year, you know, do
And
backpacking
travel.
in Thailand or something.
Yeah, yeah, yeah. I think that's great. Wonderful conversation, and it's always interesting to kind of be able to chat with people from all over the world. You get different kind of experiences. Yeah, I just wanted to thank you for your time, and I guess I'll also add the links of where people can find you. But do you want to redirect them in a specific place, maybe that they can know more about you?
Yeah, sure. So I write a Substack called Asian Century Stocks, and that's the URL as well, asiancenturystock.com. And that is my full-time job. I serve my subscribers. Um, it's yeah, as far as I know, it's probably one of the biggest, probably the biggest like newsletter
Can you tell
for
how
equities.
many subscribers you have?
Like free subscribers about 20,000 or 19,000, and the number of paid is about 520 currently.
Okay.
So yeah, you can also find me on Twitter. My handle is Mike Fritzell. So yeah, I tend to tweet excessively.
Nice.
So you can yeah, chat me up on Twitter if you want.
Nice, cool. So thank you so much and hope we can stay in touch.
Cheers. Thanks.